Otsukimi. This is Observations with Otsu. It is Monday. It is October. We have a lot to discuss. I think we're just going to kind of dive right in. We got some summaries to do, some preliminaries to do, and you better believe I'm excited right now. The way the price action has been, the way that people have just not been listening or even looking at the charts or having their own bias. It's really frustrating, but I'm at the point where I don't want to be frustrated anymore because guess what? I'm making money. I'm doing it the easy way. That's the theme of the video today, making money the easy way. We're going to go into a segment of just a rant or whatever you want to call it. It's just I call it a segment now of just talking about making money the easy way versus all the other hard ways that people have been trying to do it for the past 2 years and are still telling you right now that this is going to be the biggest bull trap ever. It's the biggest bull crap ever. So we're going to go into that. Then we're going to go into Bitcoin. We're going to talk about how easy it's been to look at the analysis for Bitcoin. And this is going to be a little bit subjective because it is easier to say it in hindsight. I understand that. I will go into that. However, we will look at just was this really complicated or did we just make it complicated? So with Bitcoin, we're going to focus on what made Bitcoin easier to trade. Then we're going to go into Ethereum and we're going to do the same thing. So the entire video is going to be basically looking at the different assets, and we're doing Bitcoin, Ethereum, and then finally we're going to do Solana. And then those three, we're going to look at how easier they actually were in hindsight. And then a lot of people just chose to take the harder path, knowing that it would be more frustrating, knowing that you wouldn't probably make more money, and trying to use narratives and economic problems to excuse themselves. Okay, because I don't like saying the phrase low IQ, but like the lower IQ methodologies have worked. A lot of people have gotten too choppy. I've seen a lot of people say that they got their thesis right for trading this year, but their timing was off. Well, one of the reasons their timing was off because they didn't look at extra easy factors. And I can't tell you how many times I see high profile traders. I've seen this multiple times through multiple cycles now, or I should say 2 cycles, that I've seen on live stream or on YouTube or on Twitter or whatever it's called now, that there are high profile traders out there. And one of them has like 700,000 followers right now that was adamant, like, hey, this chart looks pretty good, but they added some extra thing according to their narrative, according to their bias, and then they were wrong. They were wrong because they didn't follow the charts, and that's kind of what the preface I want to say today. And you can be right or wrong. I'm not dogging on anybody. I'm not. You can be wrong about a lot of things. I've been wrong about a lot of things this year. Excuse me. But and I've had a lot of timing on my side as well. When I went on my trip for 2 months, I could not trade. Now, thankfully, well, I could trade, but it would have been a hassle. But thankfully, the market for that 2 months was the worst for this year. So, so that worked out in my favor. So I don't want to exclude that, right? I don't want you to think that you just suck or something, because that's not what I'm saying, and that's not what you should believe either. You should always believe that you can do better, and always understand your pitfalls, limitations, while also acknowledging your strengths, and that's what it's there for. You're gonna have different strengths than me, vice versa, and it's okay to trade differently. Like the point is to make money, okay? And so I don't. That goes back to making money the easy way. Why would you make things harder for yourself, knowing that the likelihood of getting an extra return out of that is going to be less? Anyway, I'll digress from that because I'm going to save that for the segment aspect of that. We're going to get some preliminaries in, and then we'll dive right into that. We got 3 very small preliminaries before we get started. The first one is going to be Aroon bots, the Aroon Pro bots, I should say. That's going to be in Nowhere Discord. All of these preliminary things are going to be about my Discord channel called Nowhere HQ. And so Aroon Pro bots is a way. It's scripts. There's 4 different ones. I'm going to release them one at a time, where it's basically a way to automate a process, buys and sells, longs and shorts, and based off of Aroon. So a lot of people don't use Aroon. I do. So I've learned a way to look at advanced metrics with the Aroon, put them into scripts, and post them as alerts in Discord. So we're going to do that. The first wave, I should say, is going to be launched this week. Everything is good to go. I just need to unlock it. That's basically um, about as simple as that. The second thing is going to be Nowhere Premium. That is going to be a premium service that I have for my Nowhere Discord channel. Um, a lot of my content, all of my content right now is free on Nowhere on my Discord, and that includes videos every day. Sunday through Thursday, for example, we did a mini market update last night. That includes chart requests, it includes an altcoin review on Wednesdays. So we're going to go deeper into that and offer a premium version of that. So you're going to get more interaction, more videos, more discussion, more trades that I make, things like that. So look forward to that as well. And the third and final thing also has to do with Discord, not necessarily Nowhere, but it's called Apex Academy. That's my education course channel masterclass that I have set up. I'm launching the 2.0 version for that. It's been a long time in the making. I understand that the market's been tough. Um, I've had a lot of things going on in real life too that has postponed that, but we are launching that as well. That's also going to be a paid service. But that is a 12-week course. I think I might reduce that to 8 weeks. I think I can kind of manage that out. So we're going to kind of look at that. That's going to be something that's later in October, but I'm going to launch as well. That's actually going to be in a different Discord group, a private group, and so we'll manage that. That's going to be teaching you all the concepts that I do. So Apex stands for Aroon, price, action, and momentum, or exponential and momentum. So that's it. Kind of incorporates 4 different ways that I look at everything. And so basically, Aroon, price action, trends and momentum, exponential moving averages, things like that, the AO. So everything that you see me do, I will utilize and share with you and teach you how to use that in an advanced way. But then I also look at other things, patterns, things like that. Everything educational wise that you can see across the board that is worth your weight in gold or Bitcoin, I should say, to use, because there's a lot of things out there that aren't really worth it, right? And so there's, again, this is kind of the theme of the video. There's advanced concepts out there that it might make you a little bit more money, maybe. Like the chances of you making more money out of that is there, but the logic, but it's a little bit on the rare side or uncommon side, right? So like, what are the chances of you investing your time and energy, investing all your money and doing all that to maybe make an extra 5% a year? See what I'm saying? So I teach it a different way. I look at all the patterns, I look at the ratios of the success rate to occurrence rate, and I help you modify your trading strategy to help you more. And then towards the end of that, I teach you how to make your own. And so we kind of go through that. And then you also get Apex alerts, the Aroon Pro alerts as part of that service. You get a lot of educational stuff to take home with you. Those things are permanently something that you get to study. So if you can't attend the 8 weeks or 12 weeks, you can take the material home, so to speak, with you. So it's well worth it. I've modified it from the first version. Everybody enjoyed the first version. This is going to have a little bit more content, and it's actually going to be cheaper as well. So this is going to be pretty good value for everyone, more or less. So in addition to that, I'll also do things like how to manage your emotions, how to manage your fear, things like that. So I got a whole strategy about that. We'll go into that. But that's all 3 of the preliminaries. That's the introduction, the long introduction. This is going to be a long video, I'm telling you, because I don't want to say it, but I was right. Okay, I was right about pretty much all of this. Most of the people in Discord know this. But yeah, I'll save that. Segment's coming up next. We'll get started. All right, so the theme of this video is making money the easy way. And I mentioned that on purpose for a few different reasons. One, it does come from like the trigger that we've had this week. We've had a pretty good week, okay? And I think that's pretty easy to explain. Today is not a very good day so far, but I mentioned that in Discord. I'll get into that in a second. However, though, talking on Twitter, talking on Discord, things like that, I've been pretty adamantly bullish for the past 2 weeks especially. Aroon gave us a pretty good sign that something big was going to happen. not just on the Aroon side across the board, but also on the RSI. Um, this here was just under the marker about 47, 46, 47. And I mentioned in Discord on the day, I think I mentioned it. No, I mentioned it in Twitter as well. On pretty much every time frame from the 4 hour all the way to the 1 month was around the upper 40 range. And so we can take a look at that. I mean, this was actually, no, I guess it wasn't the 4 hour unless it was talking back here. I don't remember exactly what day I mentioned that, so I don't want to include that and say that I was wrong. So I'll leave that just blank for now, I guess. So on the daily though, we did have that. We had a lower or upper 40s. We're getting ready to cross the 50 basically, and I mentioned that because the 50 RSI cross is a big deal, especially when it comes to higher time frames. We can see on the weekly that we also had crossed that as well. And then I know this was before the end of September, so I had mentioned that as well, that we were underneath it as well. And so now for all these, we are above the 50. And I mentioned this for two reasons. One, there's a lot of confluence here. And when you get a lot of confluence this high on or of this stature, I should say, on this many time frames, that tends to stack up. And so I want that to be clear. The second thing is this is a pretty dead simple strategy. The RSI is probably one of the oldest strategies that people use consistently. It's on everybody's chart. It's always mentioned, but it is badly ignored. And so that kind of leads me into the theme of this video, making money the easy way. And so there's a lot of ways that we can address this. But the main thing is that people are too obsessed with making things so complicated, excuse me, that you end up not making money and that you end up doing something that's not trading, it's not productive, it's not beneficial for you, for your mental state, for your physical state, for your spiritual state. And I don't really understand why. Okay, I've done a pretty good job this year of making money. I want to say, like, this hasn't been my best year. This has been a good year. It was definitely probably the top 3 years, I'd say. Yeah, I think it's my third best year. Now, I've done so. Now, obviously, I should say this is my best non-bullish cycle year. I should say that because the first one was actually, on the run up here, right around here. The second one was probably around here. So I want that to be clear. So that's kind of what I'm working with. But it's one thing that I haven't traded a lot for this year. I traded a lot in January. I traded a lot in March. And I didn't trade a lot until I traded a little bit in August. And then I've traded more in the past 2 weeks than I probably have the past 6 months. Because the market was demanding it. And so it's one of these things when the market gets tough, and I understand this, and I fell for this back in 2018, not to the extent that a lot of people do now, because in 2018 nobody followed FOMC. I'm telling you, nobody followed the meetings. Nobody cared about the DXY. Nobody cared about the S&P 500. Okay, nobody cared. Most at 99.9% of native crypto people did not even think about it. Okay, charts were in Bitcoin pairs instead of USD pairs. Then there was USDT pairs, and then USDC came out. USDC wasn't a thing when I started. Okay, the troll box was a thing when I started, and I didn't participate in it. Back then, you could leverage trade somewhere, and you didn't even have to put in your email half the time. You could go onto Trade Ogre and just trade away. I didn't use leverage until KYC came out. My first leverage exchange was I think OneFox, which isn't even like, what's that, right? Half you guys probably don't even know. So, but excuse me. So I say that to say we have this is multifaceted because, and I guess I'm just going to dance around it. The idea is that nobody cared about things like FOMC, and then we got obsessed when COVID happened, and this that I really I want to be proven wrong if I am incorrect. But my suspicion is that once the COVID drop happened, everybody freaked out. Okay, people started freaking out about the economy, about the stock market crashing, um, about inflation, about the housing prices, especially, and knowing that the 2008 housing market could have been a catalyst. And so people tried to connect dots. Now, the problem with that is people try to connect dots that didn't need to necessarily be connected. Nobody was telling anybody that those dots need to be connected. Yes, the treasury bonds are a thing, right? And are they correlated? Kind of, but not really. You know, I saw someone mention that, like, oh, the bonds are continuing to go up, so that means the market's going to, continue to be bad for the next month. But they neglected to see like the things like the the divergence. Let me see if I can even find it here. Is it even on here? Here it is. I think this is it. Yes, this is it. So this is the monthly chart. This is a prime example of what I want to talk about today. And I didn't even plan to bring up the bonds, but it just came to mind. I saw a chart on Twitter, like, I don't know, last 2 weeks, sometime within this, previous candle, that hey, the 2 year yield government bonds are going up, and when they go up, it tends to be a bad thing for the economy, tends to be a bad thing for crypto, tends to be a bad thing for stocks, blah 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 blah. First of all, I don't really know that that's true or not. I don't know. I don't have a personally. I don't personally have enough evidence to put that together, but I can kind of see where they're coming from because at the end of 2017, which is basically right here, the bonds went up. This is when the bear market started. So right here was the bear market, right? And so we did kind of bottom right around here. And so that kind of, coincides with that. In the 2021, so this was the pandemic. So I really, I need to talk about the pandemic in particular because a lot of people put that into their charts, but it was a black swan event. And so, how do you view those? How do you view that? Well, the way I view it is it's an anomaly. So you do need to consider it overall, but also understand that when it's time to take exceptions, you need to understand that the pandemic drop for the Bitcoin is a V-shaped recovery. That V-shaped recovery doesn't necessarily need to be uh, used for your analysis. So, for example, it doesn't need a retest. Black swans, from my educated opinion, don't need to be retested. There's no reason to, because black swans are an extra trading event, where retest are trading based events that are core and functional to that chart. Black swans are not. And so it's one of those things, if you start chasing them, now you're going to try to retest the lows. And that's another thing, sweeping the lows. I got so much to get into. Like, people are obsessed with sweeping the lows, and people have no idea what that even means. Okay? Let me get back to the yield here. I'll get back to the pandemic here in a second. So what we can see here is that towards the end of the bear market, the yields did go up. So that is something to consider as well. And so the reason I bring this up, excuse me, is because somebody mentioned this in correlative in these correlative terms. Like, all right, if the bond yields go up, that means the crypto market goes down, and then we can see that that is true here, and that is also true over here. So now the funny thing is that person's not necessarily wrong, because if you say something like that, then typically there's two types of people. There's one person that's just going to believe whatever he says, and then the second group of people are going to be like, well, I don't know if I believe you, but I'm going to check the data to make sure. I'm like, okay, the correlation makes sense. Now, the problem, however, is there is a third, smaller group of people that say, no, you're wrong because of this divergence. And so this is a prime example of looking at things from an easier perspective because you're trying to make things harder by correlating this. Like I want to let you in on a secret. You don't have to correlate things. You don't have to correlate anything. I don't know why people are obsessed with correlating data that is beyond their asset class. Okay? It is one thing if you want to try to correlate Bitcoin to an altcoin like Chainlink. You know, that was mentioned last week. Somebody else, not me. And that's perfectly fine. And you're more than welcome to try to correlate data from different assets. Yes. But you don't have to. The market is not demanding you to do that. You don't have to do that. You don't need to do that to make money. You don't need to do that to lose money either. But the thing is, you make things more complicated. I mentioned this last year when people are looking at the S&P 500 and they're looking at the FOMC meetings. They're following the FOMC to hear what Jerome Powell says, to see what the S&P 500 is going to do, to see what that's going to do to Bitcoin, and then what Bitcoin's going to do to their altcoins. And so you have a chain of things that are reliant upon each other, the first step, second step, all the way to the very end. So whatever you're trying to do, some of you guys, if you guys need to be honest with yourselves and just realize that, and be honest that you don't care. Let's be honest, nobody cares about what Powell says for the most part in the crypto world. And I'm respective of what he says, and I take it to heart. But the thing is, people just watch him to see, like, well, what does this mean in the charts, and how can I long or short? Okay, the market's moving. That must mean I must be moving too, and blah blah blah. You don't have to do that. You realize that if you look down deep, you are being reactionary, you are being emotional, and you're playing in the moment. And all three of those things are relatively bad for a consistent, profitable trading strategy. All three of those. Okay? You can be reactive to price action. Yes. But you should not react to price action, if that makes sense. So if a coin, puts in a new low, for example, that's a reaction. You could react to that by saying, okay, that's probably a continuation pattern. Maybe. It just depends what it is. But we know this year in Bitcoin that's not the case. That's been a sign of fake outs. We'll get into that in the Bitcoin section. This is going to be a long video. We're still in the segment portion. But what I want to say is that looking at FOMC, to look at Powell, to look at S&P 500, to look at Bitcoin, to look at altcoins, that is a long process that people claim to be correlative. Then they add the DXY to that. Then they add the housing bullcrap. And I'm so frustrated by that myself because it doesn't have to repeat. 2008 was a single event in time. Okay? Can it happen again? Absolutely. Absolutely. However, we have no evidence that that is beyond a one-time event. Now, yes, we could try to correlate the banks, and we hate banks, right? So, like, it's easy to do. We can try to correlate all the data. We can look at the high interest rates. Oh, the interest rates they should be going down because, like, the only reason that people think that interest rates should go down is because they're used to them being down. They don't have to go down. They don't have to go down. Okay, they've been at 7% for some time. Well, guess what? They were like 15% 40 years ago. Okay, so they're still relatively down. Okay, this is where I don't necessarily like agree with people like Dave Ramsey. I mean, I do respect him. I think there's some things he gets wrong, some things he gets right. But he mentioned something 2 years ago is that it was right before the interest rates started going up. He said this is the best time in the past 30 years to buy a house because the interest rates are so low. Okay, and I took that. I understood. I didn't get to buy a house. We were about 3 to 6 months away. Sorry for the noise. We were about 3 to 6 months away from buying a house ourselves, and then the pandemic happened, and we got priced out. I should have, My grandparents passed away, and I should have bought their house, and I didn't. And we planned to buy another house instead, and then that didn't work out. But that house that I could have gotten went up almost 400% because it was a very strategic location. It got sold for a really good deal, things like that. So I missed out on a lot of things. But one thing that I understood is if the interest rates are lower than they ever been, that's that's not something that necessarily should be always the case. That's a sign of mean reversion potentially. And so now that we have an interest rate of 7%, and I'm no expert on this, by the way, yes, the interest rates are 2 to 3 times the size, but the interest rates are still relatively small from history, and so there's no reason to like we are greedy if we think that we demand 2%. Okay, it doesn't have to go down. Nobody says it has to go down. Everybody's perception is that it should go down because of XYZ emotional thing, not because, oh, this is unsustainable, blah, blah, blah. And it could be unsustainable. There are some issues to consider. I think the market is not in the best shape. I don't think it is. But that doesn't mean that we should look at fire and brimstone. Okay, that doesn't mean that we're going to get a market crash. Doesn't mean we're going to get a big short 2.0. Okay? A lot of you guys were barely even born. Like you guys probably weren't even. Some of you guys weren't even be able to vote when Obama came into office. When the market crash happened. When the automotive markets went bankrupt. There was a lot of other things at play. Okay, and so could we see similar things? Yes, we could. That is on the table, and I am considering that. Okay, but the thing is, those are extracurricular things, and there are easier ways to look at things. For example, this is the Aroon trend. Okay, if you don't want to use that, you could just use an EMA or something like that. Okay, either one can work. But for my Aroon trend, this is just a way to look at the Aroon, and we can see from month to month perspectives, we can see the trend. When this flips, we understand that the overall trend is going to turn bearish more than bullish, and that's one reason it is going down. That is not why it is going down, but the structural flow is that it will go up and down. And so you can just look at that. That tells you everything that you need to know. That it's a simplified 2-line explanation for all the data that you're trying to receive. And you're making yourself crazy and you're making your spouse crazy by saying all these paranoid things. Okay. Another thing is, with the bonds, people are, this particular person kind of complicated things like, oh, they're going up, which means, the everything's dead. Well, we have a very insanely high monthly narrative. It is time for this to go down. It's time for this to go down. So that's one thing that I don't think like they don't understand. I think there's one here actually. Let me check. So that was 86, and that was 86.73, 86.65. So that's not actually, but I think there was one here. Yeah, here was another one. So I guess that was what I was looking at. So we had one, and this is what I want to say. Monthly divergences in general are so easy, and I've said this so many dang times, and I get pissed off. Okay, I've said this on Twitter, and I think Discord as well. Divergences are so dang easy to look at and try to predict. Okay, EMAs are so easy to predict and look at. Like these things matter. RSIs, everything. Okay, these are simple things that have been, yes, everybody uses them, but they've also standed the test of time. Okay, and that's more important to me versus looking at wave theory explanations. And it's okay if you use that. I'm not saying that you should or shouldn't. But the thing is, if you're so focused on it, and it causes problems. And I do that with Aroon. Sometimes there was a time about 3 years ago where I focused way too much on Aroon to the point where it didn't make me as much money as I did. And I thought about quitting, stop using Aroon. But the point is like I can use it too much. Okay, I love pizza, but you can eat it too much. See what I'm saying? So there's you got to have a healthy weight for that. But here we can see um, right here is that we had a that wasn't the div that I thought it was actually. Um, there was one here, and I gotta figure it out. Maybe it's whatever. So anyway, this is yet to play out, so I could be wrong about this. This is, and I'm okay with that. But the point is, I'm not going to ignore a monthly div of this size. That could be a sign that it goes down. If it goes down, and if they're correlated, then it will go into the favor of crypto. Okay, so that's how I view that. And it's just as simple as that. And then if it goes up, it continues to go up, and it's part of the trend. Either way, it's a win-win. For as far as how to watch to look for the charts, right? You don't need to bother yourself with all these little things. Okay, um, I just get so frustrated. I was even I was even watching something yesterday about will the stocks go down? Is the crypto going down? And the person, the trader in particular, said yes. I'm like, are you kidding me? Are you kidding me? They don't have to. Like that's a very dangerous thing to say day in and day out because they don't have to go in the same direction. If they do, why are we trading both? Okay? If they both do the same damn thing, why don't you just trade one? That doesn't make sense. The correlations, after a while, make zero sense because why would you trade an altcoin that relies on Bitcoin, that relies on stocks, that relies on Jerome Powell, that relies on the FMC? When you might as well just gamble at that point. It just, it doesn't make sense to me. And I'm not here to say that they're correlated or not. That's the thing. Market's down today. I knew it would be down today. I mentioned that in Discord. This is a buy the dip opportunity. I don't even look at stocks from day to day, and I can tell you I've been, yeah, and I really hate to say it this way, but I've been more right than I've ever been, and I should be because that's how experience works, right? But I've also looked at stocks less than I ever have. In fact, sometimes when I type in the S&P, when I type in SPX, sometimes I put USD after it, USDT, because I'm so used to looking at crypto. And so that's the thing. I've looked at the stocks less than ever. My stock portfolio is really bad, honestly. I looked at it today, um, and it's not good. I'm still down like 60-70% from 2 years ago. And I trade it differently now. That's probably one reason why I focus my efforts on crypto. And it's one of those things like but I should digress. But the point is, I take an easy approach to trading. You should always take the easy approach. If you find something that works, what is a way that you can boil it down and make it easier and easier and even easier than that? Okay, a lot of my scripts here. I got this one. I got this one. I don't trade off the government bonds, but this is my Aroon script, or this is the blue here is my Aroon script. The buys and sells are my Apex script. Okay, those are things that I've learned over time, like so much so they've been so repetitive. I look for them that all of a sudden, like well, hey, I can program. I'll just make a script, so I don't have to think about it. And so that's the thing. And so this shows me where my stop loss is. I should have bought here. This is a bond obviously, so 1.17 stop loss at 0.78, and so that would have worked out. Obviously this is not something that that's a 8, but obviously you're not trading the bonds this way, right? So excuse me. So that's how that operates, and I do that because I've learned over time to just quantify my scripts. So anyway, I'll digress from the segment part. I have a lot more to discuss, but I'll save it for Bitcoin, Ethereum, Solana because I need to get this rolling. But the general idea of this is don't make this complicated. I've said this multiple times in a lot of streams. This is my 40th episode of Observations with Otsu. I counted them yesterday, and a lot of my stuff relies upon looking at things easier than other people. because people complicate things. They add order flow, they add wave theory, they add all these things that make no sense. I've seen somebody do like real astrology, like not like your basic, like they like look for it all day, every day, and they give you nothing more than just abstract, like nothingness. Okay, well, how does it make you feel? And I'm not saying this to be arrogant, I'm really not. But how would it make you feel if someone makes more money than you by only looking at an EMA or RSI? Because that's been me. Okay, I've been doing pretty good. Um, I do wait. I'm strategic about which positions I look at. But um, anyway, we'll get into these things. Why I think the market is doing good, and why a lot of people are just kind of really just focusing on the wrong things and trying to make it more complicated. Like this is core disbelief stage. It really is, because like the market could go up like 100% tomorrow and people won't believe it. They'll just short more and more and more and more and more. Like people just refuse. Like they're people refuse to believe that we should be up this high in 2023. So like Bitcoin, okay, this is how far we've been up. We opened the year at 16.5 basically, and even with the drop down, we're still at 28,000. And people don't want to believe it. And honestly, that's just a sign. That's a sign to them that we should keep going down. But that's bullcrap. And the reason it's bullcrap is because they're making it more complicated than it should. Okay, they're making it more complicated than it should, and so much so the idea is that intelligence breeds arrogance almost every time. The more intelligence you try to have, the more arrogance you end up getting. The problem with it with the crypto world is a lot of people aren't really intelligent, and I'm not. I wouldn't classify myself as one either. But the problem is people try to pretend that they are intelligent, and that's even worse because then they get their data wrong. And so when you pretend to be intelligent, you start to pretend to be arrogant, and then you become arrogant because of the data. Okay, a lot of you guys, you need to be honest with yourselves. Some of you guys have never went to school, much less financial school. Okay, and I'm not dissing on anybody. I'm not. But there's a lot of things, like a lot of these complex strategies and ideas, they take a lot of education to kind of look at. It's not just what you see number wise. I'm telling you, you don't think for a second that the government wants you to watch the FOMC meetings, or that news sites like MSNBC or whatever it's called. I don't even watch it anymore. Like, you don't think that they want you to look at that, and you don't realize that maybe that might be part of the plan. See what I'm saying? Like, those are the same people that told you to buy Ripple at $3 5 years ago, and now it's at 51 cents. So you got to keep all that into perspective. And so when people look at things for like people look at complex things because they want to act smart. And if they act smart and look at it from a smart way, and I've done this, I've been guilty of this. If I try to look at it from a smart way, I feel smart, I act smart, I look smart, I can impress people that think I am smart. But the problem is I don't make any money. And so that's the thing. Yeah, I was at a wedding 2 weeks ago talking to someone, and we were talking about stocks and crypto, and I didn't really, I was just talking about price points. I wasn't talking about statistics. Okay, and I was able to mention more of the weight that I have in my portfolio, because that's what matters. Your portfolio is the what matters. Who cares about a dang chart, honestly? So, but when you make it too complicated, you pretend you're smart, but then the crux of that is then you rely on that data. It's like it has to be right because the intelligent data says so. No, it doesn't. It doesn't. In fact, the more that you look at it, the more you'll realize that it actually doesn't. It's probably less than 50%. Take the greed and fear index, for example. Not a very complex system either. But when you look at the fear index, like things tend to go up when it's fearful, right? Or like even the trading view stuff, like it says strong sell. Well, Did you ever think that maybe like the best time to buy is during a strong sell? It's the opposite. This is what market psychology is. So don't overcomplicate things. I think we're gonna go over Bitcoin, Ethereum, Solana, and I'm gonna go through the strategies that I've used for the past year to dictate my price actions that I bought. And so you guys know that I bought 16,800 Bitcoin. Okay, but it's about 3 to 5% from the bottom. Pretty freaking good. I added more at 20,000. I added more at 25,000. Um, for Ethereum, I did buy, but I don't remember what price point offhand. To be honest with you, but it is up in profits now. I know. And then Solana, I bought a 5% bag basically at $18. Now it's at 24. That was 2 weeks ago. Okay, and I was very adamant to say like, hey, you guys probably should buy something in Solana under $20 because I don't think it's going to go under again. And now it's up. Hey, we'll get into that. But anyway, the point is, you can make money the easy way. You can make money the hard way too. But even if what if I told you? This I'll wrap up the segment here. What if I told you you could make $100,000 trading the easy way and $110,000 the hard way? So the hard way would make more money, 10% more. But you'd also have to put in 50% more screen time, and you might lose out on some family events and or mental capacity. See, is the 10% worth that? I think most people would be wise to say no, it's not. I think it might depend on your age, maybe, but I think overall most people would say that it's not, and that's kind of the point, right? Like I have not made as much as people that have been obsessed. I will say that, but I've also made more than a lot of people that have been obsessed as well. And that's the thing. You always are going to find some confirmation bias with traders too. There's a lot of traders out there that are good, that are more complicated than I am, that make a lot of more money than me. But they also dedicate their full time to that. They're probably 10 years younger than me. They probably don't have a family and other things that, going on. And they probably have more capital too. So there's various factors, right? So I just want that to keep in mind. Um, yeah, don't complicate things. I guess the idea is it's okay to complicate things. Don't complicate things on purpose when it doesn't contribute to more money, because all it's going to do is it's going to give you heartache. And people have regular lives. You should live a regular life somewhere, and so that plays into it as well. You don't want to lose family time. Okay, so just keep everything in mind with that. We're gonna get started on the Bitcoin section of this here, and yeah, I guess we'll keep going, and yeah, we'll just keep going. All right, we're gonna go on to Bitcoin first, and so the thing, I guess the flow is I'm gonna discuss the weekly and daily time frames, and then we'll kind of go into the theme of it relative to making money the easy way, and we'll kind of go with that. First things first, with Bitcoin, I kind of want to mention the monthly. So let me go ahead and get rid of all this because the monthly we crossed the 50 RSI on this time frame, and that's pretty good. Historically, that has been a good sign. This hasn't been a good sign here, but this was a great sign here, honestly. And so this is one of these things. I know people are going to be kind of having a hernia over this, but let's say, the top. Let's look at the top, right? So from here all the way to here, we had a 70%. I guess you can go down to 26%. So that's one thing. I understand we had a drop through there. But again, this is talking about focusing on the easy way. Do you want to make 26% or not? I know that's not a lot of money given that wave, right? But if you try to compromise that, then you'll never believe what you see on the charts. Okay, so you always need to believe what you see on the charts, even though it could be wrong, because you're going to be wrong anyway at some point. You might as well just have a flow, a stream of analysis that makes correct decisions consistently. So if we look here, so your cross was right, your cross down below was here, your cross above here, so let's say you got back in. So now you head up to like 600% somewhere, or even 700, depending on where you're at. So that's what I'm saying. So as far as RSI crosses are concerned, on the 50, that is a big deal historically. If we kind of go to the Brave coin, I think it's Brave. Did they take it off? Did they take it off? I think they did. Why would you take it off? Hold on. I guess they took it off. So whatever. Is this liquid index? I guess they changed it. I don't know. Anyway, so this is it right here. I thought it was called Brave New Coin, but I guess they changed it. So let's do logarithmic for this example, and we can see here. Here's your next run up, about $250 or 320, and so that went quite a ways. So the 50 RSI, and I hate using logarithmic, but the 50 RSI is a good example that we enter a new phase of the cycle almost every single time. So this, sorry, excuse me, I got like a lot of mucus or something today. So, but every time we cross above the 50 RSI, it has been important. Okay, here, so from here, it's not fair to compare the tops, right? But from here, it was 4,000%. From the last time it crossed, you don't want to necessarily do cross to cross, but this was even 18%, right? So that was critical. That was pretty good. So from here, from cross to cross was, I think 26% we said earlier, but it can go as high as 100%. And so the third one, which was right here, you basically had a top of about 560 on this monthly. But if you go from cross to cross, you still mentioned about 300. So either way, you're looking at pretty good. The conditions are what I want to look at. That the conditions themselves are going to be more bullish for the next 6 to 18 months than they will have been for the past 2 years. And you need to reframe your mind with that, and at least in my opinion. Now, another thing to keep in mind is these red lines, and I didn't plan to talk about them, but these are halving markers. Okay, and so we can see that the 50 RSI happened roughly right around here, happened about 300 days beforehand. Okay, and so the second one, I probably should just keep it up. There we go. And then this one, I know there's two here. That happened about 400 basically. The next one happened much, much sooner. And so you got that to work with, about 60 days. This one has not closed yet, so keep in mind this is going to be for the end of October. You got about 183 days. So things are matching up. So I disagree. There's a new narrative going on. And again, this plays right into my theme. There's a new narrative going on that says the halving for next year won't matter. Like it's not going to be important to help dictate the cycle run and blah 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 blah. And there's a lot of data that is brought up because of that. Well, that's all fine. I looked at the data, and I looked at this person in particular, and it doesn't make sense to me. And I'm okay disagreeing. I think that this person also is okay with agreeing to disagree. I think that's fine, and I think that that should be healthy. That's a healthy way to approach trading. That you're not going to always agree with everybody. Now, for me, I don't necessarily see the reasoning why we should all of a sudden play it differently. However, I'm not in the crowd that says, "Well, you should long everything because of the halving." I don't think that way either. I don't really, though halving doesn't really give me a lot of weight as far as direct trading. Now, secondary trading, a little bit. um, but the hash rates and everything else, there's more people qualified to me in my Discord. You can ask them questions that um, we are pretty much at peak bottom as far as the hash rates and things like that. Now, going back to the halving segment, I see no reason to believe that it would be different, and that is a prime example of this person in particular. And there's other people that have done this. There's a lot of people that agree with this person now. They got kind of a small crowd about this. A lot of people look into the data and they look into it and look into it and intelligence and smartness and studies, and then they see all of this, right? The same person I'm talking about thought that we would go to all-time high by the end of this year, and it's possible. I think it's unlikely, but it is possible. Um, And if it does happen, I'll be more likely to believe the halving thesis. But it's an example of looking too much into data and trying to be smart about how you make your money. It like as far as like high intelligence. Like obviously you want to be wise in making money, but sometimes that's not the case. And so you can marry your bias. You can decide that, all right, this is exactly how it's going to unfold. And I've seen that before. I've seen that with the pandemic as well. A lot of people were absolutely adamant that we would be going down to like 10,000, 8,000, even 4,000 Bitcoin to retest the COVID pandemic. I'm not kidding you. A lot of people thought that we would retest here. You know, and I've muted this person because they really think that we're going to go down here. We could. I'm not saying that we won't. That would be a very good deal if we do, as far as buying in. But like, really? Like, are we really going there? Like, can you just stop and think for like 5 seconds that maybe that's not the number one strategy that you should go with? And that's the thing. For me, it's not about the right or wrong. It's like, how do you prioritize these strategies to make the most sense? And some people come out with whacked out ideas, okay? Like, I literally saw somebody doing like a spiral thing for like hurricane. I don't know what's. I get so frustrated about this, and I don't know why. Because we're doing fine. You know, we're doing fine in our Discord. But the thing is, that's the RSI aspect, and so it's a very simple thing, right? And so there's nothing that we should really be concerned about, other than that. As far as it comes to this, right? So this is a very simple thing that has a simple approach. Like when we cross the RSI 50, the conditions get better. Okay, the conditions are much, much better than when they are below. And look, the reason I have this blue band is a way to visualize 40 to 50, honestly. And if you notice, we spend much less time. Let's see if I can go back here. We spend look how much little time we spend below the 50. See what I'm saying? Like, why would you not pay attention to that? That's such an easy thing to look at. Okay, such an easy thing. And so that's kind of how I view it. We spend very little time underneath it, and so we did cross above here, so that didn't work out. We actually crossed, twice actually. So now this is the third time. So yeah, there is things to consider about that. I understand. But relatively speaking, we spend so little time under the 50 and so much time above it. So the time to start thinking more bullish is now if this crosses the 50 by the end of this month. So that's just a monthly perspective. So I'm going to zoom down to the weekly and just take a look at what we had here. So we can ignore the first candle because that's the first day of the week. Had a very long run up from last week, very successful. Not the biggest candle we've ever had for the weekly, but a pretty good one. No engulfing, nothing like that. So that was the case with this one. We had engulfing here, or a bullish breaker here. We had a bullish breaker here, and we did not have one here. And so as you can see, that's one reason why we had only like a wick retest. This one we kind of went down to retest as well. So this wick went into this range. And we have another one here for this one into this range. So everything's been playing out, okay? Nothing's really out of the ordinary. We're up above the 50 marker. Aroon is a very wide bullish, so we got a lot more reasoning to continue to say bullish. Does that mean that this week is going to be bullish, though? No, not necessarily. And so we need to play that into perspective. And so that's the thing that a lot of people that are try to be more intelligent than they should be, is that they think that this previous candle should be faded, and then we're gonna get a bullet. Then if we get a bearish candle, we're like, see, it was a fade, and it's gonna continue to do so, and then it's gonna rip upwards, and then be like, well, it's gonna do it again. And so like that's the thing. Like it cracks me up how so many people double down instead of just being okay being wrong and starting to make money. Okay, because most people here are not interested to make money. They want to be right. And that's the sad reality. You should be focused on making money. Don't focus on your P&Ls. Don't focus on trying to be right. Focus on your probabilities, your P&Ls, things like that. Okay? Focus on strategies that make you money, because I can guarantee you some of the best ways to make money are the easiest ways to make money. And there's some hard ways as well, but you will realize if you try to simplify your system and possibly even trade less, you might make more money. So anyway, so that's kind of what the weekly is. So far, we're still within a range. Honestly, if you wanted to look at it from a different perspective, you could look at it from this range. Kind of a weird way to look at it, in my opinion, but that's also an approach. We do have a trend line here. Not the best one because it doesn't have a lot of touches, but that's also another way to look at it as well. Um, with all this, we do have a liquidity zone here that we tapped. We held above here for like 4 to 5 weeks, and so we bounced off of that. So that's the thing. You can see this more, I think, on the daily time frame. But we had bounces here right on the trend line. Okay, and then we also have the EMA 200, which we bounced above. And so that's it's so simple. I'm telling you, like I've got people actively telling me how stupid I am for following a bounce off the 200 EMA. Like, are you kidding me? Okay, so this plays into it. I don't see why you would want to short at support, and that's exactly why we had a long. That's why we had a short squeeze yesterday. Because people are too crazy to think that we are just going to nuke, and we could, And I mentioned yesterday how, after the liquidations, that's probably the top. Typically, when you get liquidations, that's typically the local top or bottom. So anyway, this is the weekly perspective. Looks pretty good. So we're going to go into the daily, and this is kind of what we got to work with here. Mentioned this in nowhere. Got a few things going on here. I typically ignore the 200 EMA on the daily for now, but we do have a bounce above that. It's not really what I'm looking at. So here this was your let me adjust this here. I feel like this is too big. All right, get some real estate here. So anyway, I had the run up. So there's a few different things. Here's your trend line that we looked at. Here was your fake out of that. And so this is one reason why the support structure was kind of weird. I think we needed to test down here, but we didn't want to. And so we ended up rejecting it as a fake out. So I mentioned that. We had a fake out here. We've had 4 fake outs on the daily. I dedicated a 30-minute video to this on Twitter. So that's one thing to keep in mind. Had resistance from this level. And so that worked out well. And then we broke above this. Now, that being said, it's all good and well. But now we have a bullish breaker here. And so now we need to potentially come back down here. So this presents a predicament because you have a bullish breaker, which means that you should retest. Now, we kind of retested it just now, but that's not necessarily what I would qualify. It really needs to test here. And so when you test through here and here, now you have like a double breaker. Now, the problem with double breakers is that it needs to retest down here. But it also needs to, for the most part, tends to close below there. And when that does, this becomes a deviation. And so now you have another problem. Now you have a deviation on top of a breaker. So I don't necessarily think that we are out of the woods locally. Despite the fact that the weekly and monthly look so freaking good, I think we could get carried away by thinking that this is going to be a bullish week. I think we could get a bearish week. I think that's possible. So, and so this is what I'm looking at. I'm looking at a retest of down here of about 27,300. And I after that I think we could go to continuation. So we could see a few different things here. We could see a touch of the trend line here. But overall, this looks good. I'm still bullish as of right now, but I also want to understand like this could come back down. You also have a liquidity zone here, and so that's kind of where the stop was. I look at from this candle here. So you kind of have a stop up here. So you're gonna have like a regional battle between this level. So it needs to kind of reclaim above here to 29,000. I don't know if we'll get that right away, to be honest with you. I would like to settle this. This is very complicated because the higher that we go, the more this is going to go down. The more people are going to be like, "Oh, it's the biggest bull trap ever," you know. So we can kind of study it from that perspective. I think based off of this and based off of how liquidations work as well. Typically, liquidations don't translate to continuation either. I think that we're going to come down. I think we're going to come down here about 26 or 27,300, and then we'll make a decision from there. Now, if we touch down here really quickly and then we wick, that's a very, very good bullish sign, and that would qualify. But typically, that doesn't tend to happen. So, unfortunately, I want to be more bullish short term. But honestly, the time to be bullish was here. This is where I started to be really bullish, and then we had that, and so now everybody wants to be bullish again, and that's one reason why like being reactive doesn't necessarily work, because there's only a strict moment in the cycle where you should buy when it's super bullish, like when the momentum favors that, basically. So I think that we're going to head down. We'll see. There's a chance that we could continue to stay up for the week. And that's the thing. We even could rally up here, have a rejection, and come down here. I'd be okay with that as well. I just don't want to, as a bull, I don't necessarily want to hold this level at 29,000, 29.2, because that could lead to further price action on the downside. So that's kind of what I'm looking at. Overall, I still think that we're going to have a red week for the rest of today. I talked about that yesterday. But I still think we could still have a red overall today for the next 3 to 4 days. So that's the daily to put in perspective for you. Now, as far as Bitcoin in reference to making money the easy way, what are some of the things that I looked at over the 12 months that we've had? Well, first things first, I didn't really look at any meetings, so I'm going to kind of zoom out a little bit. And I want to mention, like, I paid attention to a lot of meetings until right around here, and then I noticed that during the meetings there was a correlation with volatility during the meetings, but there was no effect on price action, really within a two-hour time frame of the meetings themselves. So I was like, well, okay. To me, that seems like the meetings have no effect. And then I started to study the FOMCs. Like, the whole point of it is to look at the trajectory of the economy over a longer period of time. So it made no sense to look at FOMC meetings as a way to buy and sell on a day trade. And so that comes into perspective because a lot of people use FOMC as a way to cut their positions, to not add their positions. And I've seen a lot of people do this. I see people that use the excuse, I will not trade this week because of FOMC. Okay, and now the thing is, it doesn't really, like, I've pretty much held all my positions that I've had. I'm not sure how many I've added or gotten rid of, but almost every trade I've had into FOMC I've kept. Okay, and it was just fine. And so that it makes me think that people are just over leveraged, or they're just LARPing, honestly, and just saying it, or just trying to create engagement and clickbait. And the way that Twitter is now kind of encourages that even more. So we have all those things, right? So I noticed a correlation between I noticed a lack of evidence between the FOMC meetings and the effect it has on the Bitcoin market. Okay, because FOMC is not a Bitcoin-based market anyway. It really isn't, and DXY isn't necessarily either. I know that's a hot, controversial thing to say, but Bitcoin is meant to be a decentralized currency to remove ourselves from those things. Okay. Why are we letting a centralized stock market in one country of the world tell us what an international decentralized currency should do? It doesn't make sense. It doesn't. And then you also have the bandwagon theories. The more people do it, the less effect that it has. I think there's a more professional term, but that's part of it. Okay, so that's one of the reasons behind that. And one of the catalysts was the pandemic. I mentioned that earlier. Is once the pandemic happened, everybody freaked out and everybody's looking for answers. Okay, and most of you all got duped. to say like, all right, we're going to pay attention to what the U.S. government's going to say about all this stuff, and it's that's fine, especially from the get go. But that was the bottom. See what I'm saying? Like everybody was freaking out, nobody was buying. That was the literal bottom. All you had to do was buy. Okay, and so it's one of those things too. The RSI was so dang low, and there's other factors at play. Um, I think on the daily it was like one of the lowest it had ever been. Let's see here. I think it was like, yeah, it was like 13. And so it's never been that low except for the bottom here. And so, or close to the bottom. So that was another thing to keep in mind. So that's, again, it's just an easier way to think about things. Yeah, it's almost too easy, but yeah, it's easier in hindsight, obviously. And I didn't buy at the bottom for COVID. I didn't for that price action, but there's that's kind of when I started to pay attention to, all right, or that's when people started to pay attention to more complex systems, the housing market too. And so one thing that I noticed was on the 3 week chart, we had a bearish divergence. Okay, and so I also had this as well. Ignore the P&L crap; it's kind of weird. But so I noticed we had like a sell signal up here, so that was a sign that we're going to get some weakness. We had the same thing here. These are not perfect necessarily. Actually, I'm going to get rid of that. So we had the bearish divergence on the RSI, right? So we had a higher high here, and then we had a lower low here, or a lower high here. Big divergence, right? So that's one of the things I kept in mind. So that told me, and this was, I think I discovered it right here, and then we had another uptrend here. I'm like, okay, time to get out, and I got out 62,000. So that was it. It's just as simple as that. It was dead simple. There's no complex strategy behind that. There's no saying that I'm going to go to 100. Who wouldn't want 100,000 Bitcoin, right? But for the price, but like you got to deal with what you got. Okay, so it was just as simple as that. Bearish divergence, I got out. We nuked, and so that was a sign that I did the right thing, and I'm gonna keep focusing on price. We had the support, and so that's basically very simple way that I looked at it. And then I kept this in mind, right? So we zoom a little bit inward to the 2 week, and I'm going to put this back up again. And so we had this here, and so I guess this is what I wanted. We had the sell signal out here, and then we had a buy signal here. But we also had a divergence. We had an RSI divergence on the 2 week. This is a liquidity signal. Okay, so that was a sign that the market was getting too illiquid. So let's backtrack here first. So we had the 3 week divergence, but the liquidity concern on the 2 week. So that was a sign that we were too elastically high and that we were going to go down, and that was correct. So now we had the inverse. We had the liquidity buy signal on the downside. This is where I bought 16,000. Okay, 16,940. It was somewhere, I don't know, remember exactly the price point for the dollar, but I bought on this candle because my script told me to do so. And so that ended up working really well. Then we got a sell signal at the top here at the 30, and now we're kind of in between there. So that's basically it. Like I honestly, like I sold the top and I bought the bottom, and that's all recorded on Twitter. You can cross reference these dates and see where I was selling or buying or very concerned and things like that. So it's just as that simple. Um, it's just that simple, honestly. In the 2 week chart, we're above the 50. So another thing to keep in mind. I mean, it doesn't get much simpler than this, right? So on the 1 day, we can also see that as well. Like, we had some of these working out well, but as far as the trend line goes, like that's all it was. It's just trend lines. We had the fake outs, and so when you get a fake out, I'll just get rid of this for now. So when you get like a fake out like this, fake outs are basically deviations, and deviations are very strong. And so all I do is play the fake outs and deviations. A fake out is not designed to trick you twice, basically. It sometimes it does, but rarely is that the case. And so that's basically it. I just looked at divergences and liquidity gaps. And liquidity gaps, that's a fancy term for just finding wicks, honestly. So And that's pretty much all it is, you know. So anyway, that's my easy way to make money from Bitcoin. How I manage that. Um, anyway, so we'll go on to Ethereum. We'll do Solana, and we'll start wrapping this up a little bit. All right, let's go to Ethereum. I'm going to cover the technical analysis first. Still pretty red day, and it's nothing I didn't say much in the Nowhere Discord. So going on to the weekly, that's usually what we cover first. So we had a big run up here, and so the way this had played out, we touched down the trend line. We had a retest of that, and then it kind of shot up straight. I'm gonna get rid of some of these things here, because I think they're more noise. And so let's get rid of that. So he had the run up here, but that didn't necessarily cause a breaker. It might have on lower time frames. We'll get into that, but we did not cover the 40 or the 50 RSI, and a big downtrend so far versus other assets. So it's something to keep in mind with this. Overall, still kind of mixed feelings. I did get the long signal that I wanted, and we have kind of like this Adam and Eve formation that we've talked about so many times now, and that was basically this. We have the deviation, the rundown, the retest, but we're still kind of in this zone, still kind of like an ascending triangle, and honestly, it's just as simple as that. I don't say anything complex. Like this has all been pretty simplistic, right? So the we're gonna, unfortunately, I don't know if Ethereum is going to be worth trading versus other assets because of the situation here, because we're still in this like triangular zone. I'm not interested in anything like super aggressive until we can cross 2000. And we still have a higher chance to go down. So if this is like the third touch, if we go to the fourth touch, the chances of going down become much higher. And so now you got to work with that. And so you also kind of have this smaller zone right here that we technically broke above, but we also are rejecting. So there's a lot of things at play. Ethereum's a little more mysterious. I've personally thought Ethereum has been the hardest asset to trade for 2023, just because it doesn't behave very traditionally, and I think a lot of that's because of the new burn cycle that they have. A lot of people holding Ethereum on DeFi wallets, things like that. So overall, that's what we got to work with. The Aroon is pretty wide bullish on the consolidation, so we have something to look forward to. I have no reason to think that we're going to go too much lower. I think a perfect retest honestly would be 1640, and then we rally higher. I think that would be really good. Going to the daily. So this is one reason why we had this kind of played out. So had the rundown, fake out, reclaim. This is where I was interested to buy. And so now we're working with this. We don't really want this to come down into an engulfing pattern on this structure, but it's not really going to affect too much. This is kind of a breaker right here a little bit. So again, we could retest that 1645 or 1640 that I mentioned. And so everything looks pretty standard. I mean, I think, see, this is the thing that bothers me though, because we have had a red day today, and I do think that we're going to continue to get maybe another 5% on the board. But that's not bearish necessarily. And so that's the thing. A lot of people are going to interpret that as like, see, I told you this was a fake out, blah, 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 blah. They're going to show their P&L where they made 1,000%, but it was really only $5. And they're going to try to show off. And it's going to mess with your mind, okay? So that's the thing. Keep things in perspective. Doesn't mean that they're wrong necessarily. So they could be right. I could be wrong. But the thing is, you got to keep things in perspective. Just because we reject here doesn't mean it's like, oh my gosh, the market's done for. We're going, like, I really hate that. I'm so tired of it. Because every time we get like a 2% drop, everybody thinks we're going down to 2K or some bull crap. So anyway, we need to understand Ethereum is in a complex situation here. I do think 1640 is on the table to be retested this week. It makes perfect sense. And then we can rally higher. We want to see that hold, however, because now we're consolidating it against the trend line, which is not a good sign. So 1640 would be where I would add. In fact, I'm gonna just go ahead and add an alert. So that's the daily. And so So how have I traded Ethereum in an easy way this year? Well, the truth is, it's probably as far as all assets, I've traded Ethereum the least, to be honest with you. And one reason why is it hasn't really given us too much. Okay, I did buy some around the Adam and Eve signal, which was, let's see if I can zoom out here, which was right around this range, and I couldn't tell you if I'm in profit or not. I couldn't tell you what price point because it was a lower amount for one. It was only like maybe 2% of my portfolio, 1 or 2%. But it's one of those things where I've been kind of waiting because this is structurally problematic. Okay, we had the Adam and Eve, but we had the deviation. And so once you have a deviation, I'm not interested in any of this. I wanted to go lower and lower and lower. I found out that there's a trend line. So I wanted to buy the trend line. And so that's kind of the presentation that I brought for the past 2 weeks. And so that's kind of what I mentioned here, like on my notes, is just trend line patterns. Ethereum is an asset that does tend to rely on trend line patterns, and so that's kind of what I'm working with. Other than that, it, it's it's not really complex. I don't know what else to say about that, but just trend lines have worked very favorably for Ethereum, and you don't really need to complicate this. But Ethereum has basically been ranging, versus like Bitcoin, which has rallied a little bit, versus, see what I'm saying? Like you could have bought here like last May and you'd actually be lower still. And so there's a chance that you could still be underwater even though that you traded below this line. So that's the problematic thing. So what I'm looking at here is you got a big triangle right here that we'll see how that plays out. If it plays out to the upside, that's like your prime buying opportunity, right? So I'm just keeping it simple. There's no other reason really to complicate that because you're not going to get the R&R, right? Like why would you think if you got rid of the trend line, right? Like if you just deleted everything, why would you think this would go up all of a sudden? Why would you think it would go down all of a sudden? So you have those things at play, right? So this makes it pretty easy. So on to Solana, and then we can end the video. All right, on to Solana. A lot to cover here. So on the weekly, there's something to keep in perspective here. I've mentioned several times that this is a pretty good structure on the weekly for numerous reasons. I think even on the monthly too, it wasn't looking too bad. Have like a really weird Adam and Eve structure here, but we're gonna zoom back into the weekly. All right, let's just look at 2 weeks really quickly. It doesn't look too bad, but nothing I can't say on the weekly. So go back there. So we had a few different things here. One, we got this trend line that I like, and so that's one of the things I was going to mention already, but I'm going to save it just in just a second. Um, so you got kind of the trend line. You had a break out of that trend line. So this is something where I think that we will continue higher. Now the complicated part of this is that we are still within a range. So we could range as much usually up to here, maybe to like 29, 28, somewhere around there for the high time frame perspective, and then we could bounce back and forth. That's a possibility. However, we did break the 50 RSI. Another weird thing is we actually broke bullish. Excuse me. We broke bullish, but the Aroon actually crossed bearish, and that's a very interesting thing. It doesn't really happen too much, but it did actually kind of happen right here, and so that's a sign that we could kind of consolidate downward first and then launch back up. So it could look something like this and then back upwards like so. I know it's not arrows, but so that's what we're going to look at. So this cross above doesn't necessarily mean that we are just going to rally to $100 or $200, right? So that's worth keeping in mind. The range here is kind of the final battle for this lower time frame, but I like what we got here. One thing, I guess I'll mention the easy way of making money with Solana was that retests. Well, you got the trend lines, but you also have the retests. Retests are very textbook, and one of the reasons is because we had the FTX fallout, and Solana isn't directly related to them; they were indirectly. But we had a very simple approach to this. We had a drop down here, retest, consolidation, breakdown, okay, and then this wasn't necessarily part of it, but then we had a range, and it matches perfectly. It bounced off of here, double top, bounced here. It kind of deviated. So it was very structurally, and we'll notice it on the daily too. Like very structurally, Solana behaves like it should behave from a textbook analysis, and so that's something that a lot of people just don't they just don't look out for anymore. Like they forget what they've learned. They try to make it too complicated, and sometimes it is textbook. Textbook stuff is there for a reason. So overall, this is what I see on Solana. I think again, good reason to be bullish on a high time frame perspective, but I still think we have some ways to go. Going on to the daily, here's what we got working out with this. You have your retest situation here. Got a little bit ways to go. RSI could be extended if we go up to that point, so that also confirms that we might consolidate, like I said, on the weekly. And so that might take a couple weeks to play out. And so you might get another chance to getting a $20 perhaps. We'll see how that goes. But I still think under 20, I think it's going to be hard to get under 20 again, honestly. So overall, that's kind of what I'm looking at. But again, very, very easy structure. A lot of retest here. Has worked out pretty well. As far as that goes, I think again, nothing really much else can be said. I would like to see a from the daily perspective, a reclaim of 2740. I think that would pretty much solidify a run upwards. And so that's the thing. I think at this structure, I don't think if you didn't buy under 20, I still think 23 is a good buy versus its potential, right? I do think Solana is one of those coins that could make all-time highs. I don't see any reason why it wouldn't. And it doesn't have the baggage that it had last cycle either. So I think that's something to keep in mind. And so yeah, kind of rehashing like the trend lines and retests. Very simple. That's all I've been doing. I haven't really, excuse me, sorry today. The from a high time frame perspective, I haven't bought any of this, because there was no reason to. And so it dropped down here. It started to I waited until this kind of ranged up. I didn't buy below here. I wanted to, and we had a divergence on lower levels. So we had the opportunity to do so, but I did not. So I waited for the range. And so once the range occurs, now you can start buying in, potentially. And so that's kind of what I did. It's worked out so far. So all these things have worked out pretty well. So anyway, that's the video. I hope you enjoyed it. I apologize if it was too long. The next few will be much longer, or much shorter, I should say, because I have some other things to do, and it does take up some time. So anyway, I hope you've enjoyed it. Let me know what you think in the comments. Please sign up for my Discord if you would like. Got a lot of things coming in store for that. But yeah, hope you have a good day, and I'll see you next time.